Hi, everyone. Welcome back. If you are new here, my name is Megan Gonzalez, and I'm one of the partners at MG Investment Ventures. On this channel, we talk about how we invest in real estate, why we invest the way we do, and how we're thinking about building long-term wealth through smart, intentional decisions. Today, I want to talk about something that comes up constantly in conversations with our clients. Why multifamily? Why apartments, and why not the type of real estate that most people start with? Because for a lot of people, the answer isn't as obvious as you might think. So many of our clients tell us the same thing. I only want to invest in real estate that's close to where I live. I want to be able to touch it. I want to be able to drive by it. I want to be hands-on. And we totally understand that thought process because that proximity feels safe, it feels familiar, and it feels like you have control. But here's the reality, especially if you live in California. That strategy comes with some serious challenges that most people don't fully realize until they've already experienced them, and it's too late. And even worse, a lot of people don't realize they're investing based on comfort and not performance. Here's the part most people don't think about. When someone says they want to invest close to home, what they're really saying is that they want control, or at least the feeling of control. But think about what that actually means. Why would you want to add another job to your already busy schedule? Why would you want to be the person fixing water leaks and replacing light bulbs? Why would you want to get calls on the weekend or late at night because a toilet backed up or the heater stopped working? Just because a property is close to you doesn't make it easier. It just makes it easier for you to be interrupted. And that proximity does not equal simplicity, and it definitely doesn't equal freedom. A lot of people confuse familiarity with control. What they're really signing up for is just more responsibility. With multifamily, the structure is completely different. We have an on-site property manager. We have a professional property management company overseeing all of the day-to-day operations. We're not the ones responding to maintenance calls, changing light bulbs, or dealing with tenant issues at 10 o'clock at night. We're at the top of the food chain, directing the strategy, setting the vision, and making the high-level decisions. And that's the difference between owning a job and owning an investment. And for our investors, it's even better because as an investor in multifamily, you are completely passive. You are hands off. You're not managing tenants, contractors, or emergencies. You get the benefits of real estate ownership without trading your time for it. And the value of that passivity, what it allows you to focus on, how it impacts your lifestyle, and why it matters so much long term, that's something that we're going to dive into in a whole other video. Now let's talk about California specifically. California is one of the most difficult states in the country to be a landlord. And if COVID taught us anything, it's that California offers very little protection for property owners. We saw eviction moratoriums that lasted way longer than expected, the rent restrictions, the changing regulations, and landlords who were still responsible for paying their mortgages, taxes, and insurance and maintenance while not receiving rent. And here's the perfect example. One of our clients had a tenant here in the Los Angeles area for like 20 years. She was a great tenant. She was a doctor. And while I'm sure that he raised her rent a little bit over the years, she was definitely paying below market value. And when COVID hit, even though she was an essential worker, she stopped paying her rent. When our client / her landlord asked her why she stopped paying rent, here's her answer: because I don't have to. And this totally blew our minds. And needless to say, from an investment perspective, that mindset and level of uncertainty is risky. At MG Investment Ventures, risk management always comes first. And California simply does not align with that philosophy. The next issue is cost. California is expensive to buy real estate in, but that's only part of the story. Insurance is expensive and only getting worse. Labor and materials are costly here. Repairs are going to add up quickly, and ongoing maintenance is going to eat into your margins. So when you really run the numbers, there's often not much meat left on the bone to generate any meaningful cash flow. So a lot of people are relying solely on appreciation, hoping that values continue to rise forever. But appreciation alone isn't a strategy. We want assets that are cash flowing today, are going to have upside tomorrow, and can withstand the market shifts. And many California markets, those numbers just don't pencil out. The third issue is one most people overlook, and it's a big one. A lot of our clients own single-family rentals. Some own duplexes, triplexes, or fourplexes, but here's the problem. If you own a single family rental and your tenant moves out, your occupancy instantly dropped to 0%. Your mortgage doesn't go down when your tenant leaves. Your expenses are staying at 100% while your income is at 0. Zero income with your expenses staying exactly the same? No thanks, not interested. And even with a fourplex, if one tenant leaves, you're immediately down to 75% occupancy and collecting only 75% of your potential income. That's just a lot of risk tied to just one or two tenants. And this is where multifamily completely changes the game. When we invest, we're buying large apartment communities, typically 100 units or more. And it's that scale that creates the built-in diversification. If one tenant moves out, we barely feel it. If 5 tenants move out, we're still strong. And if 10 tenants move out, we might still be at 90% occupancy, which means we're still collecting rent. We're still covering expenses. We're still cash flowing. And instead of your income depending on one household, it's spread across dozens or even hundreds of residents. And it's that stability that matters. We're also very intentional about where we invest. In my next video, I'll expand upon this in even greater detail, but here's our high-level view. We don't invest in California, period. We don't invest in coastal markets where insurance is just as challenging as it is here either. Instead, we focus on landlord-friendly states, emerging markets, not the saturated ones, areas with population growth and job expansion, and markets with temperate weather, which is going to help us reduce our long-term maintenance costs. Emerging markets are especially important to us. These are areas where we can buy well, improve the property, and add value rather than overpaying for something that's already perfect. And that value add strategy paired with population growth supports our high occupancy, sustainable rent growth, and long-term appreciation. When you zoom out and look at everything together, the landlord laws, the cost structure, the occupancy risk, this is where multifamily really starts to make sense. Multifamily allows us to reduce risk through scale, create consistent cash flow, invest in markets that actually support landlords, and build long-term wealth intentionally, not with speculation. That's why multifamily isn't just what we invest in, it's the foundation of our entire strategy here at MG Investment Ventures. So that's the why behind multifamily and the why behind how we invest. If this video was helpful, make sure to like and subscribe so you don't miss future content where we break down our approach, our markets, and how we think about real estate investing. And if you want to learn more about how we invest or just want to follow along as we share more behind the scenes, stick around. We're just getting started. Thanks so much for watching. I'm Megan, and I'll see you next time.